Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings so you do not have to. Today we are diving into a document that tells us about Aqua Incorporated and their plans to sell more stock straight from their S-3 filing. Let's see what financial story this gives us. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we can chat more about these filings. Alright, let's get straight into it. We are looking at a registration statement on Form S-3 from Aqua Incorporated, filed on the 24th of October 2025. This document is all about them registering more shares of their common stock that can be sold on the market. Basically, they have some existing warrants that can be turned into shares, and they are getting ready. So those shares can be sold. So what is being offered here, it's up to 1,133,794 shares of common stock. These are not new shares being created out of thin air by the company itself for general sale. Instead, these shares can be issued when certain warrants are exercised. These warrants were given to a specific entity, which is named as the selling stockholder on the 16th of October 2025. These warrants give the holder the right to buy Aqua Incorporated stock at a set price. The exercise price here is $11.34 per S-share. Interestingly, the warrants can sometimes be exercised on a cashless basis, which means they might not actually pay cash to get the shares, but instead exchange something else they already own or have a claim on. For the shares based on a formula, these warrants are good for a while, expiring on the 16th of October 2030. Now this is important. Aqua Incorporated itself will not get any money directly from the selling of these shares by the selling stockholder. However, if the selling stockholder decides to exercise their warrants by paying cash, the company will receive $11.34 for each share. If all the warrants are exercised for cash, the company could potentially receive quite a bit of money, around $12.8 million. But they are very clear that they cannot predict if, when, or how many warrants will be exercised for cash. It is possible they might expire without being used for cash, or only be used in that cashless way. The company's stock, known by the ticker symbol AQMs, is traded on the Nasdaq Capital Market. As of a recent date, the 23rd of October 2025, the stock was trading around $10.05. Now, this is a key point. The sale of these shares by the warrant holder could happen at market prices or even below market prices. If the selling stockholder decides to sell a lot of shares, especially at prices lower than what the market is currently offering, that could put downward pressure on the stock price. Let's look at what else is in this filing. Aqua Incorporated is trying to revolutionize metal recycling with their aquafining technologies. They are focused on developing cleaner and safer ways to recycle metals, aiming to bring high-value critical minerals back into the supply chain while cutting down on pollution and creating safer workplaces. They use a process that involves electricity and electroplating instead of polluting furnaces and harsh chemicals to recover metals from things like spent batteries. They believe their method is a big improvement over older techniques that create more emissions and waste. They are currently working on showing that their aquafining process can produce high quality metals from lithium, iron batteries more efficiently and with less waste than other methods. So circling back to the offering itself, this prospectus is for up to 1,133,794 shares of common stock that the selling stockholder can sell. As of the 22nd of October 2025, there were about 29,827,62 shares outstanding. It is important to note that this number excludes shares that are part of stock options, restricted stock units, or reserved for future grants under their various stock plans. This means if all those other share-based awards were exercised, the total number of shares could be higher, leading to more dilution for existing shareholders. Now, no filing like this is complete without a deep dive into the risks. And Aqua Incorporated is very clear here. Investing in their securities involves a high degree of risk. They state that investors could lose all their investment. That is a pretty direct warning. The market price of their shares can swing quite a bit. Between their high of $39.36 and a low of $3.46 in the year leading up to late October 2025, that is a huge range. They list many factors that can cause these price swings, including performance of competitors, economic conditions, and market acceptance of their products. They also point out that future sales of their stock, especially if done at lower prices, could further dilute existing shareholders and push the stock price down. Another critical point for income-focused investors is that Aqua Incorporated has not paid dividends in the past and has no plans to do so in the foreseeable future. They intend to reinvest all earnings back into the business to stay competitive. So if you are looking for dividend income, this is likely not the stock for you. As mentioned earlier, the company is filing this registration statement because they are obligated to do so under an agreement related to the warrants issued to the selling stockholder stockholder. The company itself doesn't get proceeds from the resale of shares by this stockholder. The only money the company might get is if the warrants are exercised for cash, at $11.34. Per share, any proceeds they do receive from warrant exercises will be used for working capital and general corporate purposes. The main player here, besides Aqua Metals Incorporated, is the selling stockholder identified as Hudson Bay Master Fund. Limited, they acquired the warrants on the 16th of October 2025. Hudson Bay Capital Management LP is the investment manager, and Sander Gerber is the managing member of the general partner. Interestingly, both Hudson Bay Master Fund Limited and Sander Gerber disclaim beneficial ownership, meaning they do not claim to personally own these securities even though they control them. It is also noted that Hudson Bay Master Fund Limited is not a licensed broker-dealer. They have the right to sell all 1133,794 shares if they choose. If they sell all these shares, they will own 0 shares of common stock after the offering, and their percentage ownership will be 0. So how will these shares get to the market? The selling stockholder can sell them in various ways. This includes through brokers in ordinary transactions, block trades, or even directly to purchasers. They can also sell them at the market, meaning they can sell shares into the existing trading market on Nasdaq. They could also sell them in privately negotiated deals. The plan is pretty flexible, allowing them to sell through different channels. Aqua Metals Incorporated's common stock has a par value of $0.001 per S-share. They have authorized a massive number of shares, up to 300 million. Each share gets 1 vote. Holders are entitled to dividends if declared, and they share in assets upon liquidation. Crucially, there are no preemptive rights, meaning if the company issues more stock, existing shareholders don't automatically get the chance to buy their share of it to maintain their ownership percentage. Now we're moving into the additional information sections, which often contain some useful, albeit often dry, details. This table shows the estimated costs associated with this offering. The total estimated expenses are $30,000, which we are told will be borne by Aqua Metals Incorporated. This includes SEC registration fees, printing, legal fees, accounting fees, and transfer agent fees. It is a relatively small amount for a stock offering, suggesting this is more of a procedural filing to enable the resale of existing shares, rather than a major new capital raise with extensive promotional costs. This section details how the company will protect its directors and officers from certain liabilities. Delaware law allows corporations to limit the personal liability of directors for breaches of fiduciary duty in most cases except for things like bad faith actions or self-dealing. Aqua Metals Incorporated's charter and bylaws provide for indemnification to the fullest extent allowed by law, and they even have specific indemnification agreements with their key people. They also carry insurance for their directors and officers. It is standard practice to protect leadership, but it is worth noting that the SEC has stated that indemnifying individuals for liabilities under the Securities Act itself is against public policy and therefore unenforceable. Here we see a list of all the supporting documents tied to this filing. It includes their charter, bylaws, and various amendments to those documents, as well as legal opinions and consent from their accounting firm, Forvis Mazars LLP. The securities offering itself is covered by legal opinion from Greenberg Traurig LLP. And finally, we have the signatures. This is where key people at Aqua Metals Incorporated, like CEO Stephen Cotton and CFO Eric West, sign to confirm the accuracy of the information in the filing. It also includes a power of attorney, essentially granting certain individuals the authority to sign amendments and other documents on behalf of the company. So, what is the big picture here? Aqua Metals Incorporated is facilitating the resale of shares by a warrant holder. The company itself isn't raising significant new capital directly from this resale, only potentially from cash exercises of warrants at a fixed price per S-share. The company is in the business of innovating metal recycling, which sounds promising from an environmental and strategic resource perspective. However, the risk factors are very prominent with a clear warning of potential loss for investors. The stock has shown extreme volatility. The fact that they have not paid dividends and plan to reinvest all earnings means that any return for shareholders must come from capital appreciation. The involvement of a large fund like Hudson Bay Master Fund, limited as the selling stockholder, suggests institutional interest. But their current strategy appears to be about exiting a position rather than a new capital infusion for the company. In assessing the company's direction, the innovation in recycling is a clear strength. It taps into a growing need for sustainable resource management and domestic supply chains. However, the significant price volatility of the stock and the explicit risk warnings highlight the speculative nature of investing in Aqua Metals Incorporated at this time. The lack of dividends and reliance on future growth and potential warrant exercises mean investors are betting on the company's long-term technological and market success. A key opportunity lies in the successful scaling and profitability of their aquafining technology, while a major risk is the continued financial viability and market adoption amidst intense competition and the inherent cyclicality of commodity markets. The company seems to be in a transitional phase, moving from development to potentially broader commercialization, a period often marked by financial risks and share price fluctuations. Alright, that is our breakdown of Aqua Metals Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you see the potential in their recycling tech outweighing the risks? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more in-depth discussion. Thanks for watching. See you next time.